The US just published their budget deficit report, and the numbers are truly alarming. The debt crisis is not only something we should be all extremely concerned about, but it's also a leading factor in the rapid de-dollarization that's happening right before our eyes. We're going to break down the terrifying numbers of how bad the US is with their money and the result of that incompetence and what other countries are going to be doing about it and what that means for you. Welcome back to the channel. I hope all of you are having a great day. Today's video is going to dive pretty deep into some important numbers, and while I know it's not the exciting stuff that you want to see with Bitcoin's charts and smaller time frames and extremely bullish news coming out in the crypto space, I think it's extremely important that we cover some of the underlying problems within the US dollar and how that could affect everyone in the near and short and long term. So let's get started and let's talk about this massive debt crisis we're currently facing. So let's just get right into the numbers. The first thing we have to go over, and the first concerning thing, is the federal spending over the last 20 years. You could see that over the last 20 years, and it's to no one's surprise, we know this and understand it. The federal government is continuously spending and printing massive amounts of money at a concerning rate as well. Back in the 2008 global financial crisis, that's when they really started to ramp up production of fiat currency or US dollars. And of course, the stimulus spending for the COVID pandemic. That's when we printed a ton of money. But you can see just recently, obviously we've come out of the pandemic and we have somewhat of like these recessionary fears coming in. But you could see it right over here. The number doesn't show, but we are spending per month billions upon billions of dollars, and monthly spending is up over $100 billion compared to last June, which is a very concerning thing. And when you zoom out and just take a picture of what is actually happening, over the last 30 days, we've added over $1 trillion in debt. Now, I don't remember if you remember reading about or hearing about the debt ceiling crisis. The debt ceiling crisis was at $31.5 trillion. That was just a month ago. Since they basically negated the entire debt ceiling, we've added $1 trillion in total debt in just 30 days. And we are on the fast track to reach $40 trillion in debt, which is extremely alarming. Now, on top of this, you would think this wouldn't be a problem if you were bringing in more money than you were spending, but that's not what the federal government does, and that's not how they operate. Think of it like a person. Imagine you only get paid $100,000 a year, and yet you're spending $300,000 a year. But you could see that our spending has gone down by 7.3% year over year, and it's dropped from $461 billion to $418 billion, where it currently sits right now. So not only are we spending more money month over month, year over year, but we're also bringing in less revenue year over year as well, which is exacerbating the problem. And this is actually the biggest drop since June 2020, since we went into complete lockdown from COVID. And you can see over the long term, this is somewhat forming into somewhat of a downtrend now. I mean, if we're looking at charts, you could see that it's just followed by tons of lower lows followed by lower highs, which is just a terrible downtrend when you're talking about revenue. Now, when we're talking about fiscal budget deficit, we are currently in the third largest in history. At $1.4 trillion year to date, the deficit is up 170% from last year at what point we're at right now. And just to make this simple, the debt ceiling was and always has been a circus show to distract you from the real problem, which is the looming debt crisis, which is not anything new, but is starting to get worse and worse. Now, this has definitely got to be one of the most concerning parts of this entire report. And I know it's kind of hard to see, but it says interest on Treasury debt securities, gross amounts of payments. You could see that in 2023, year to date, right over here, in this box, we have paid over $652 billion in interest payments alone. The concerning part of this is that we're on track to pay $1 trillion a year in interest payments alone, and that number is only going to go up. From last year, we're already up 25%, and the current rate on those interest payments is sitting at 2.8%. And again, it's expected to go up as we go into the future. So to sum all of this up, this is pushing many countries away from the US dollar towards better alternatives. It's no secret that BRICS is wanting to make their own currency backed by gold, possibly Bitcoin, and possibly other assets as well. And on top of that, BRICS GDP is to reach 128 trillion, almost double that from what the US GDP is. So when you're talking about competitors, when you're talking about if you're a country and you have two decisions to make, are you going to use the US dollar or a possible BRICS alternative that's a little bit more trustworthy and backed by something, what are you going to go with? Especially seeing the alarming numbers of how fast the US is getting themselves into debt. The dollar itself is also dropping at record pace. I mean, it's at lows that we haven't seen since April 2022, and I think it's going to continue to bleed, as we see over here, where just recently the dollar has started bleeding, and that's because China has been dumping a lot of their US securities. So we could see the Chinese yuan pumping to the upside as the US dollar is pumping to the downside, and a lot of that is because the Chinese yuan holds over $850 billion in US securities, and as they continue to dump on the markets, it's going to make the US dollar weaker and make a lot of these other currencies much stronger and more reliable. And over and over again, we're going to see more countries continuously join BRICS as they see it as a safer and more reliable alternative. So at the end of the day, what we're seeing is rapidly rising US debt levels, rapidly rising interest rates, and interest expenses that will soon equate around 25% of the government's revenue. So the debt crisis that we're seeing is an understatement. That is the true problem and the real problem that we're facing here, but yet it's not getting covered on any mass media because they don't want you to know about it, and they don't want you to understand how alarming it is, especially when there's obvious massive global talks of alternatives to the US dollar and what that means for the future. And personally, the way that I'm moving about this is that I'm going into hard assets, things that cannot be manipulated and things that cannot be taken away, created by man and created by governments that can be swayed. And what I mean by that is going into things like precious metals, Bitcoin, and obviously real estate. But that's everything I had for this video. I know it's not one of those super enjoyable videos to watch. It's a lot of doom and gloom, but I think it is important to understand where we sit on a global monetary scale because it does affect us in a very large manner. But if you guys want to continue to stay up to date on the crypto markets and a lot of these types of updates, make sure to subscribe and like the video down below, and I'll see you guys next time.